when you read through IM, sometimes you see these words like 100% outgoings recoverable. Means you can recover 100% of the outgoings. Now, what do you mean by outgoings? In this video, I am going to uncover what does that outgoing means and what is this 100% outgoing recoverables is going to impact your commercial property purchase journey. Okay, so the first thing is that outgoings. Outgoings says that all the expenses related to the property that you have. So it in other words, like your rates, your maintenance, your land tax, your insurance, these all are the things called outgoings. And whenever you see that is 100% can be recovered from the tenant, is basically meaning that all these outgoings, it is going to be paid by the tenant. So in other words, whenever you're purchasing a commercial property and these outgoings are paid by the tenant, literally it means that the rent the tenant is going to pay is everything yours. So all you need to do is that you need to pay the mortgages, and if there is any shortfall, then you need to pay, of course, to the mortgages payment. But if there is no other shortfalls or if there is any extra money, then it is yours. Let me give you an example. Let's say you found a property where it says that the rent is 100,000 plus outgoings payable by the tenant. Now 100,000 rent plus GST, let's say. So basically the tenant is going to pay you 110,000 divided by 12 months. So each month they are going to pay that monthly portion of that rent. Now once you get the rent, the outgoings, which is like, let's say every 3 months or 6 months, you get the council rates. So every 6 months, let's say you get the council rates, and then every 12 months you get the land tax. All these bills when you'll get, and you pay to the council or you pay to the government, and then those charges you bill to the tenant, and tenant will pay all these things, which is why it is called the 100% of the outgoings can be recovered from the tenant. And this is how the commercial property is so lucrative. This is how people do buy commercial properties, because these expenses keeps on going up every single year, and as you know that if it goes up, it will be paid by the tenant. So as a landlord, your opportunity is to collect the rent, and there is not much expense from that rent, which is why the rent that you collect in commercial property is kind of fixed. It kind of like a net, and then you pay only the mortgage if you have taken the bank loan, and the remaining that you keep in your bank account. So 100% recovered outgoings is where tenant will pay all this land tax, insurance, rates, management fees, is this. And this is how sometimes it is called a triple net lease, because all these things, all the expenses, all these outgoings will be paid by the tenant. So if you are planning to buy a commercial property, if you are looking for it, always look that, okay, who is going to pay these outgoings, how this lease is been written, and as long as these outgoings are paid by the tenant, you are happy to purchase. If it is a gross lease like a residential property where all these outgoings will be paid by the landlord, if tomorrow the land tax goes up, landlord has to pay. If tomorrow all other expenses that goes up, landlord has to pay. Whereas in commercial property, these all are generally will be paid by the tenant, assuming that in the lease it is written that outgoings are 100% recoverable from the tenant. I hope you got some value out of this. You understood now what is that outgoings and how this 100% outgoings can be recovered means from the tenant. So you now found an idea of these things. So next time when you are looking for a property, you look for these things in the IM, who is going to pay for these outgoings, and as long as it is paid by the tenant, it could be a lucrative opportunity. Thank you so much for watching. I'll see you next time. Bye-bye.